what's up? Tim Sykes here. Video lesson time. Want to go over some recent plays and just how to think about recent plays, whether you're nailing it, whether you're selling too soon, whether you're missing the plays, whether you're over holding or staying too long or over trading. You know, trading is such a fine balance, and I want you to understand that. So if at any point during this video you do understand that, or even if you know that already before you watch this video, leave a comment underneath this saying trading is a fine balance. You know, you want to try to make the most money, yes, but you also want to watch out for risk. You also don't want to become a slave to the market where it doesn't matter how much money you make, you know, you're still a slave. I know many people who make much more money than I do, but they live terrible lives. To them, it's just about, you know, stacking money in a bank account, and it's like a video game, and they don't really ever truly live. So I don't want that for you too. I know that sounds like a good problem to have, like too much money, but you're still a slave. You know, I want you to use the stock market, yes, to get wealthy, but at the same time to also enhance your life and your family's life, just like, you know, all my top students and I have done. So now I do have to congratulate Jack Kellogg. Just gave a great presentation, so I got him some shots. I encourage you to watch this presentation we did. We call it the Freedom Window. This is all leading up to the inauguration day, and we go over, you know, in this presentation, which I'll link below, you know, what Jack has been doing, you know, because this guy has been making $1 million plus per month lately. Not just $1 million per year, but $1 million per month the past few months. And remember, you know, Jack has come very far, very fast. He loves to post about, you know, 7 years ago. I gotta highlight it because it's pretty crazy. 7 years ago, this was him trying to sell pillows. He bought all these bamboo pillows. He was trying to sell them in a Connecticut mall. They couldn't even afford their little kiosk. And so him and his buddy, you know, had a janitor application form on their desk from the mall supervisor. The mall supervisor is literally just ripping on them, being like, you can't even afford your kiosk, at least like be janitors. That was 7 years ago, okay? And this was when he was closing in on $1 million month in November, and he beat that in December. I think he made 1.4 million in December. But this was just 7 years ago. So if you ever have trouble in your life, if you ever have a lack of money, if you think that, you know, the world is closing in on you, just remember Jack Kellogg, because in 7 years, he has gone from failed pillow salesman, you know, with a janitor application, you know, to now making 7 figures, not just in a year, but in a month. And so he deserves these shots. And we did this free presentation. It's free. It's called the Freedom Window because right now with the inauguration, leading up to the inauguration, which is awesome, but also even after the inauguration, Jack goes over his newest indicator that he's been using to crush it. So congratulate Jack in the comments below too. You know, he's such a young guy. Beautiful, beautiful house. I went to his house just the other day, and I posted about it. I don't know if he wants me to show off his house, but I don't care. I'm just proud of him. He bought this house, you know, pretty crazy, where it's a beautiful house and he's in his early 20s, and, you know, I'm just so proud of him. So that's some daily inspiration. Let's get into some trades. This week, you know, I'm making a little bit of money, but I'm not on Jack's level, obviously, but I'm also just not like nailing it. And, you know, for good and bad, like I'm traveling literally all over the world. I'm not using that as an excuse, but like when I'm traveling all over the world, I'm just not going to be there as much as I should be, because there's runners, as I've been saying, pre-market, during normal market hours, and now after hours. And I'm nailing some of them, but I'm missing a lot. So if you have a busy schedule, recognize it's not just you. Sometimes the market requires more time, but, you know, take what you can when you can. So, you know, going back to my trades this week, you know, AIFF and MGIH, I mean, this was really a bad trade on my part with MGIH, and I want you to learn from it. This was a pre-market spiker with no news. I just thought that it was going to be like a good short squeeze and keep going. You know, pre-market, this was a runner from $1.50. Oh, what did I just do? Yeah, right here. From $1.50 roughly to $3.25. So nearly double, all by 6 a.m. Comes back down to 2-ish and then spikes back up again to new highs. But then it just starts its long path to irrelevance. And this happens a lot these days where pre-market is the best. And, you know, I mean, this started to fade at 7 a.m. Usually you get like a 7 a.m. spike. That's probably like the biggest warning. You know, if a stock is not spiking that's been running, if it's not spiking at 7 a.m., you got problems. Why is 7 a.m. so important? Because that's when many retail brokers open. So if retail traders are going to bid it up and it's going to be like one of these, you know, crazy runners, you want to see a 7 a.m. spike. And this, I probably should have, you know, paid more attention. This was a really, really bad trade on my part. I specifically bought it on a dip thinking that it could bounce. And I'm in denial, and I'm just out. The only thing I did right was like cut losses because it came all the way down even further. But, you know, if you're going to try to capture a runner, whether it's pre-market or, you know, during normal market hours, it has to run, okay? You can't stick around. And that was really kind of like, you know, just a kick in the stomach. You know, AIFF was another pre-market runner that I was going for. I mean, this one actually has come back a little bit, but not as much as, you know, right here. And this is something that I've been noticing. So this is what I'm talking about, where even if you lose, you should learn from it. So I lost on AIFF. This was the other day. And, you know, I thought that this was going to do well overnight, and it really couldn't. It was right in here. And this was, in my last video lesson, I warned about, you know, the backside of things, and you're just not getting the same spikes. And this is a classic example. So I went for an after hours. There was a little opportunity. Where was it? Right here in the 330. So this wasn't like a terrible trade. Like I'm dip buying it. You know, I'm in at like 310, 315-ish. It did gap up to 330-ish. So, you know, theoretically I could have taken like $1,000 profit, but that was at 4 a.m. Eastern and I wasn't up. And then by the time I got up, it was down. And so I took losses. The reason why I bring this up is because guess what? Long before I was holding it, you know, overnight here, and, you know, make or break, like win or lose is not going to be a big thing because there's just not much volatility or volume. But I missed it here, and I noticed that, you know, pre-market, this thing is running, okay, in the 3s and the 4s, and right at the open, it spikes from 440 up to 580. Obviously, that was the top. It was the beginning of nothing, but this was a good lesson that you can get these spikes on these pre-market runners right into the market open. And this was, you know, from 440 to 580. I mean, this is like in a few minutes. So even though I missed it, even though I lost, I take that knowledge with me to the next trading day, to the next trade. So no loss is completely useless, and it's a good lesson. MGIH was a good lesson too. Fannie Mae was perfect. Okay, so Fannie Mae, in case you remember, I mean, there's so many plays. Let me get rid of Nuke. Nuke is a good example where I missed this after hours run up. They had some news. They resolved their NASDAQ delinquency. This is one of the biggest supernovas. Had I been awake here at 4 p.m., you're damn right I would have been buying this. You know, I know it's a little higher price, but former supernovas can run again. NASDAQ relisting kind of news can spike stocks. I don't know when exactly I would have bought it, like 24, 25. And I probably would have flipped it in the 26s or the 27s. I wouldn't have lasted to the 30s. But this is what I'm talking about, where I just need sleep. Like, it's crazy lately when there's so many plays. But this is a nice after-hour spiker. If you were up, congrats. But what I wanted to bring up here was Fannie Mae. This is why it's good to know multiple strategies. Fannie Mae, you know, this was a beautiful morning panic and bounce. Right in here. You know, this thing has been running from the 3s all the way up to nearly 8. You get a morning panic back down to 6-ish, which is right when like really the last big spike started. And so I'm dip buying it. And this is a classic morning panic and bounce. This was my best trade of the week so far. Probably even the best trade of the month. Not necessarily just in terms of money, but like I'm a little rusty dip buying these morning panics. So I was a little too excited buying at 612, but then I added more size at 590 and I got my average to the 590s. And then I flipped it in the 620s. And this was a nice, you know, only a 4% winner, but it's really nice to see that my old classic morning panic and bounce pattern is still alive and well. You know, in case you don't know, this is the blog post. I'll link it. You know, you're looking for these morning panics near the open, and it's really, you know, easy, and you just have to wait for them. So I'm happy about that. So this was much needed because I felt like crap after AIFF and MGIH. And this still, you know, was a nice profit. And then I lost more midday on BKYI. And I was just, you know, really bummed earlier this week. Like no huge losses, but really just aside from that morning panic and bounce, like I was just wrong. And, the market is choppy. So, sometimes you're going to be wrong, but it still doesn't feel good. BKYI was better earlier in the day when I was too afraid because it was just running so much from here, $1.50 up to 350. Okay. And again, this was right at the open. Make a little mental note. We saw, what was the other one that spiked right at the open? AIFF spiked right at the open. And this one spiked, this is the open right here. It's not always perfect. This was way off of its highs. But you can see here 930 was clearly the bottom, and it spikes from $1.50 up to 250 in the first 30 minutes. So, when you have AIFF spiking one day right at the open, then you have BKYI spiking right at the open, you start to recognize, wait a minute, even though I have a loss, is there a pattern here? And so 2 days in a row, you have a spiker at the open. So what am I going to do? Oh, and also there was another one. Sorry, it wasn't just BKYI that spiked big. It was also SGBX. This one spiked big. And this one, mind you, was already spiking pre-market. They had some positive news. They're acquiring, a new transformational technology, whatever it is. I'm sure it's BS. But the thing is spiking pre-market 4, 5, 6 a.m. And then notice when it really goes supernova. And I noticed this and I missed it because I didn't want to chase it. But right at the open and into the open, it's going from like $1.50 to 2. So this is the third example of a stock spiking at the open. Okay. That is what led me to this. So as I'm filming this on a Friday morning, Thursday into the open, I bought BMRA. I got a lot of questions about this where people are like, what, Tim? Like, you usually avoid trading at the open. You usually say like things are so crazy you won't do it. First of all, you can take a small position. I bet less than $5,000. So small positions are good to test speculative strategies. But again, AIFF, BKYI, and SGBX all spiked at or near the open. So I'm testing my theory. Yesterday, pre-market, let me show you BMRA. BMRA did not finish up. I don't care. Near the open, guess what it did? It spiked big. Okay. And it wasn't like the biggest spike and it was really choppy, but I got it at $1. I flipped it at $1.10. It got up to $1.27. So there was roughly 30% spike right at the open, and I took a third of it. So this is why I wanted to make this video. I missed the other ones. I had losses. I had these gut punch trades, but I kept learning. And I used those lessons to then, again, I didn't make such huge money on BMRA, but it's good to test out a thesis and then see it play out. So I'm making this pre-market. I'll post this pre-market so that we'll see what the biggest percent winner is on Friday morning. And I guarantee you, I will be looking at that for a potential buy at or near the open. I might not hold it to the open, like, BMR out of all four of them was the worst of the spikers, but, I'm not the only one who sees this pattern. Other people see it too. So, when you have a lot of people specifically trying to buy near the open and sell near the open, as I said in the beginning, trading is a very fine balance. You don't want to overstay. Right? So BMRA, it was all about can it spike at the open? It did. I took my 10%. It ended up being like a nearly 30% winner. After the open, fading all day. It's dead to me. So, some people say, why are you trying to focus on these plays? By the end of the day, they're crap. I don't care what happens by the end of the day. I go in for a very specific goal. Whether or not it spikes near the open, I'm going to be out within a few minutes. It's either going to be a successful trade like it was, a hugely successful trade, which it could have been if I had waited like a few more seconds, or a small loss if I'm wrong. But no way am I going to hold it all day and then be down 30-40% by the end of the day. So, this is the beautiful thing about having a small account, trading with a small account, trading very meticulously. And I'm happy with this trade, really happy. Not just in terms of money, but because it was like, revenge for missing all the other ones. And then I had a little trade here on FSI, which, I didn't trade perfectly. This was, right before I was giving a challenge webinar. And when I start the challenge webinar, like I got to open up some software, like it takes my attention away from the trade. I'm only in one trade at a time. I like watching every single tick. So it's really tough for me to start a webinar when I'm in the middle of a trade. And unfortunately, This was happening with FSI right as I was trying to start the webinar. And this was very choppy, mind you. They had the big new contract for their food grade manufacturing, which is a big legitimizer for like a very sketchy company. Not as low of a float as I usually like. I mean, 8 million share float. It only traded like 18 million shares. So it traded double the float. But a lot of these plays that spike the most, they're trading 5, 10, 20 times the float. So not a perfect play for me. Also, food manufacturing, kind of a slow business. It's tough for the stock to really go crazy. So I didn't want to chase it on the initial spike from the 4s to nearly 6 because, you're just never sure. But I don't mind risking it on a dip, which is what I did. And if you're in chat, I've been saying, like, before I buy, I say watch this stock for potential dip buy, like the lower the better. So I think that it could respike, but I'm not 100% sure. So I'm in on the lows. And again, worst case scenario, I'm going to have a small win or a small loss, and I'll just be out if it doesn't bounce. Best case scenario, obviously, it went back to 6. So there was $1 a share of upside, not just by after hours, but like within 15 minutes of me buying or 20 minutes of me buying. The problem was I had to start the webinar, and I bought in right here, the only time of day where it kind of did this stutter step, where it uptrended a little bit off the lows, but not much. And, when I'm forced to start a webinar and I'm forced to take my attention away from this, and it doesn't look like it can really bounce big, I just get out. So this was far and away not best case scenario. I still made a few $100s, but a little disappointing, right? So after all the lows of having losses and missing a lot of the big spikers, yesterday I nailed the market open, so I felt good. And then came kind of another low where, this one spiked. I mean, this one hit 6. I sold out at 10:15 a.m. I sold out right in here when it didn't look like it was going above 5. This was around 10 a.m. 15 minutes later, it's $1 a share higher. I wouldn't have held, all the way up. I probably would have sold probably around the VWAP. It's tough to say, hey, this stock is going to reclaim the VWAP. I probably would have, if I had to guess, I probably would have sold here at 525. Best case, I would have sold at 550. No way would I have lasted through these 2 candles because it's, just a choppy stock, and I was already up. But I was already out when it failed here at 5. But this is a nice uptrend. This is what I wanted. So, long story short, this is trading. This is trading in a choppy market. I'm winning more than I lose. I'm learning valuable lessons. And when I do lose or when I do miss, it helps me get better and prepare for the next trade and the next trading day. I'll say it again. Trading is such a fine balance. Okay. When the market is giving you opportunities, but obviously none of these opportunities are truly perfect other than the Fanny Mae warning, panic, and bounce. You have to expect choppiness. You have to expect that you're going to lose on some. You're going to be frustrated a little bit. But the good news, the reason why I say trading is so great is not just because of the money that you can make. If you look at these students, I mean, Jack buying the house is freaking awesome. But we also were joined by at dinner, Stratty. He's now at around $600,000. Former gym teacher. We have debates whether, gym teaching is a real job and teaching people to climb the rope. JCP, former security guard. He had a $250,000 month last month. Just literally on the day, when we took this picture, he made $50,000, which is awesome. Eric, great Turkish guy, came here, crazy backstories. I'll get him on video one time, showing his journey and, seeing how he really sold his whole life and soul to become an American citizen and, going from homeless basically to success story. He had I think a $96,000 month last month. Obviously Jack has been making 7 figures. And then Mari, I have a video with her. Stay tuned. She made about 300 grand last year. She's trading smaller size, but less stressful. So really cool to see, everybody and talk to everybody. These are just a few of the top upcoming challenge students, but this is trading, okay? And this is why I make videos like this to try to give you the right perspective, because newbies usually think, I lost on a trade, I suck. Or you feel like the market owes you, we did a webinar with all of us and Stratty was really grumpy that he made 6 grand on the day. And it was because he saw better opportunities and he knew he could have done better. But at the same time, that happens, okay? Sometimes you will be too conservative in a hot market. The whole key is trying to grow your account, whether you make 6 grand, whether you make 3 grand, whether you make, $50,000 or $100,000 a day like Jack has been doing lately. You're learning. And it all adds up over time. You grow your knowledge account, you grow your brokerage account. It's all about compounding. So, when I show you my trades, many traders make more than me. But remember, I donate this to charity. I am not in an ideal trading environment. I never had a mentor or teacher, so I don't have the ideal discipline that I try to teach and instill in you. I am nowhere near best case scenario. The one thing that I have is a lot more experience than most people and a lot better perspective than most people. So you tell me in the comments if you understand that trading is a fine balance. Tell me if you've been making money, if you've been learning, if you understand when you miss 1, 2, 3 trades like I've done this week at the open, and then you try to capture the next trading day opportunity. Let me know if that makes sense. And again, I'll put this out Friday morning pre-market, so you have plenty of time to watch it and be ready for the market open. I don't know if I'm going to trade pre-market. Lately I've been kind of hit or miss pre-market. Like a week, 2 weeks ago, I was dead on every single day pre-market. But now I think it's cooled off a little bit. So now I've moved on to what has been working, or what I've been seeing working, which is right near the market open. So I do like trading near the market open better than pre-market because I really just need sleep. It's crazy. It's crazy, these hours. But, again, we're all beholden to the market. You choose what time you want to trade. You choose how dedicated you'll be. But when there's opportunity, I really do think that you should push it, because this is the time not just to grow your brokerage account, but to really grow your knowledge account. And if you can trade pre-market, awesome. If you can trade at the open, awesome. If you can only trade in the afternoon, awesome. I missed DATS. This was a nice spiker. This is not the first or the second, but the third time in just 5 trading days that it's really spiked. Actually, I missed the last spike. So what was it, like 7 trading days ago? This was the big spike from the 2s to the 9s. Then you had another big spike from the 3s to the 7s. And now this is the third time. You got a lot of choppiness in between. I'm not interested in the choppiness. I want to focus when it spikes. And this one was the smallest spike from 4 to 7, but that's still a lot of range. Okay. NUKK, or I guess I should also talk about PHIO. PHIO was another big spiker, from the 2s to the 4s. But watch what happens when it fails to hold the VWAP, or even when it does squeeze past the VWAP for a little bit. It also does. They did a financing. So recognize that these are crappy little companies. They'll break your heart if you let them, if you overstay. You really want to try to be there when the volume is surging and when it's running up. Even the dip buy, yes, you could have, bought the dip here at 360 and flipped it at 440. But, if you were there during the offering, there's no real way to get out. And frankly, you just want to be on the front side. I did a video the other day talking about the front side. I'll link it below. I'll include a bunch of links below, okay? The importance of being on the front side of these moves. I'll include a link to Jack's new indicator about the freedom window, which I think that you should capitalize on. Again, this is a free presentation, and it has been working for him the past few weeks. And he thinks that it's going to not just end on Inauguration Day, it's going to last another few weeks probably. So you just got to push it when there's opportunity. So that's today's lesson. I hope you're doing well. I'll see you guys in chat. Just stay safe and try to keep learning. Do not freak out if you lose, especially lose small, cutting losses quickly. It's all part of your education. Utilize every single loss, every single gain, every single day, every single trade to get better in the future. Because this is all about your future, okay? How can you get better prepared for the future? You don't want to waste good opportunities, good trading days, because this can really help you learn faster. Cheers.